Welcome back. You're watching Trade of the Week, and joining me to unpack Sasol, Standard Bank and Absa Bank is founder at Herenya Capital, Petri Redelinghuys. Petri, always a pleasure. Good afternoon.
Good afternoon. Thank you very much for having me.
Brilliant. Anything that these counters have in common?
Zero, really.
Zero.
Well, two of them are banks.
Yes.
And one of them is a moon rocket. I mean, a Sasol, a oil company.
Let's talk about Sasol being a moon rocket and what that means.
So, okay, there's a couple of things. One, obviously the oil price is a big driver for Sasol. Sasol has been underperforming for some time, as you can see by the chart we're looking at the moment. One of the interesting things that I think is going to be a bit of a catalyst, part of the reason potentially that Sasol has been underperforming in comparison to the oil price trading, very much at the recent highs, Sasol definitely not. So one of the reasons for that, I think, there's been a lot of uncertainty around the future of the Secunda plant. Sasol has said, look, we might have to close this down if we can't reach some sort of a deal or an agreement on what we're going to do with emissions, particularly the SO2 or sulfur dioxide emissions. Their proposal was to essentially shut down a number of the boilers in order to bring their total emissions down, rather than to reduce the concentration of the sulfur dioxide emissions from each of the respective boilers. So they have a certain target that they have to reach, and instead of reducing the concentration from all the boilers, let's just shut some of them down and we meet the target that way. This was rejected. They appealed, and they recently won the appeal. So this is good news, right? I think what this means is that a lot of the participants and fund managers and whoever else have been avoiding this share because they don't know, look, if Secunda shuts down, it's a big problem. It's obviously economically for us, it's a lot of jobs, but also it's a huge portion of their earnings, right, that they're essentially just going to lose. Now that is out the way, and we know that at least for the next 5 years they can continue to operate there as they now set new emissions targets, I think this makes the stock very attractive again for fund managers. And this undervaluation that we've seen, obviously Sasol is more than just an oil company. There's obviously chemicals and all sorts of other stuff in the equation as well. But a lot of this disconnect that we've seen from the higher oil prices and the expected performance from Sasol that we've essentially not seen, I think that this now has an opportunity to catch up. So, we think it's a 200 Rand share. Now, if you didn't buy it at 150 bucks or 140 Rand, I know buying it now feels very late, but there's still plenty of meat left on the bone here. So if we look at our little chart that we've got up here, we're essentially targeting this sort of longer moving average or longer term moving average. It's a 200-day moving average that we're looking for as our price target. And, I think that we've got a very nice little well, you know what? I think I just figured out there is a theme that connects all the dots, right? Mean reversion trades.
Yes.
So we've got a little mean reversion situation set up here that I think we could potentially go back to this 200 Rand level, and that at least is within the short term. I mean, we have to look at a very long-term downtrend change scenario here. If we can get up through 200 and stay above 200, we attempted it there, we failed. If we can get up and stay above it, then potentially we have a longer-term trend change. If we switch to weekly, we can see that, if we can essentially get a trend change here and get this type of move, we can do very, very well from here. However, for now, let's just look to see if we can get to 200 Rand a share, which is around 40 Rand's worth of upside from here. So for this more speculative high-risk trader, there's a great entry for a short-term trade that could potentially turn into a great long-term hold. So full disclosure, our portfolios that we run for clients, we are long Sasol. And we have no intention of selling out. But 200 Rand is our short-term target for traders. However, we'll probably remain long Sasol for the foreseeable future, beyond 200 Rand.
It is very interesting, Petri, how your sentiments around Sasol, because the share price has, like you're saying, really been battered over the last few years here. You look at the other parts of the business, fuels, mining, how are you on those ones?
Look, I think that, for the most part, if you look at Sasol as a whole, I think when it was trading around 140 Rand or whatever it was, the price to earnings ratio was something like 3. It is incredibly cheap, right? So that's really sort of the view here is that, yes, okay, during the pandemic you could have got it for 25 Rand a share, so it's not quite that cheap yet. But, there's a couple of just disconnects where the market just looks at this thing and it's like, Sasol's not going bankrupt. Do you know what I mean? They've been around for 100 years. They'll probably be around for another 100 years, right? So I think that something that's essentially this cheap on a historical basis, and yes, in COVID it was cheaper, but that was really sort of extreme circumstances.
Yeah.
I think that this thing is a steal at this price.
Ah.
So even though, yes, not all the businesses and the business units are going as well as it could be, it's a challenging economic environment for everyone. But it won't stay challenging. We know that the nature of the economic cycle is, well, cyclical, right? And good times will return. Sasol will do really well.
Brilliant. Speaking about cyclical, let's get into our banking stock. Let's start off with Standard Bank. They, of course, really gave the best set of numbers recently. But that share price was down so sharply on the day, PG. So let's get into the stock and what might be happening with investors' thoughts around the bank.
So I think one thing that I just want to point out here is that with regards to, the banks, these are against the trend change or trades that we're taking. So they're mean reversion stuff, and they're really very technical based, right? So these are not really driven by many fundamental inputs. These are essentially short-term trades, right?
Okay.
It can be said that the higher interest rate environment has benefited the banks, and if we start cutting interest rates, it's going to put some pressure on banks' earnings, because obviously they take fixed deposits and pay out floating. Or they charge you floating when you borrow money from them, and they only pay you fixed. So as the interest rates go up, their margins expand, and when interest rates start to cut, that starts to compress a little bit. So if eventually the interest rates cuts begin to happen, which we've seen, every time we think the Fed is going to start cutting, they kick the can down the road a little bit because inflation is persistent and the interest rate's higher for longer. So for now, it seems as though, at least for the next 3 months, there's no real interest rate cuts on the cards. So until then, I think that obviously changes the picture a little bit if we do start seeing these interest rate cuts coming through. In the meantime, however, what we have here, and I'll just draw this in on our little chart here. So we're starting with Standard Bank. What we have here is a nice little longer-term uptrend. Okay. Now, yes, we spent some time below the channel line. Sort of mid last year, and we're kind of in the same time of year again, and sort of right back at the bottom of the channel line, and it's possible that we might punch through the bottom like we did last time. Okay. However, you can sort of see here that this channel has been mostly intact for some time, right? So we're at the bottom of this channel again, so the very short-term trend here is down, the medium-term trend and the longer-term trend here is very much up. Right, so we've got an opportunity to essentially buy at the bottom of the channel and trade it to the top. So you could say that this is a bit of a mean reversion trade, because we know that the trend is up. It's made a counter trend movement, and now it will return to that sort of to follow that trend again. And the same is true on Absa. So I know it's very sort of brief analysis on both stocks. Absa is a little bit of a different setup, though. I think let's just wrap up with Standard Bank first. We're trading an upward slanting sort of channel line here, right? And this is the high probability setup. So, for example, and these are the types of trades that I like to do. Now, granted, the hit rates of the trades are kind of like 50-50. I think it's 51% of the trades that I do I get right. But if you get a trade right where you can say, for example, put a stop loss. Let me take this magnet off. Sometimes it's a bit annoying. So if you could sort of stop loss at 174.50, move that a little bit, and grab this upside all the way to the top of the channel, you've got a risk-reward ratio of 8 to 1.
Sure.
So for every R1 you risk, you're potentially making $8. It's not going to be the kind of trade that, in 2 weeks from now you're going to close it. You might be in this trade for some time, but the risk-reward ratio is really high. So it's a very high probability setup. So it's the type of trade that I like to take. And the way that I feel is it's a relatively safe trade as well. If we sort of switch to a weekly chart, we can get a bit more view here. Maybe the stop loss is a bit tight. You could even give it a bit more space to move down and maybe go for a 1 to 4 risk-reward ratio, just to give it some breathing room in case we punch through the bottom of the channel line. But for the most part, it's a very high probability trend-following trade with a very high probability entry. So it's what I like about that. If we look at Absa, for example, which is the other bank that's also a bit more mean reversion, it's a bit of a different situation. I just want to load more data here. Okay, no, so unfortunately not much more available. Here we have what could potentially be a Head and Shoulders setup, right? I think that's the first thing that stands out to us. So we have to be quite cognizant of that. If I can find, sometimes this platform is amazing and sometimes it is just too many buttons. All right. So here we have a shoulder and a head. Where's our neckline? There you go. And another shoulder, right? So there's our little head and shoulders pattern. So this is something that, you know, should be considered relatively risky. If this pattern, if we're now essentially going to trade to buy this stock, to take a long position here, which is against this thing. We can at least know very quickly that if we are wrong, we can downside target for this, right? So I'm just going to draw in a couple of things here. Please forgive me while I do some on-screen art lessons, how to draw lines. So we can essentially sort of target it over there, right? So that is a mighty way down. It's like 81 Rand, 82 Rand as a potential target price for the head and shoulders. So on the weekly picture, that looks quite scary. So what we do know is that if our trade that we are taking as a long position here fails, we've got a very clear downward setup for our head and shoulders. We will have to probably draw in this little trend line here to connect that. So you could say that what we're doing here is really trading against the larger scale pattern, right? So just keep that in mind when entering into this trade. So for the sake of this, I'm going to just essentially remove all the drawings that I just made. And we're looking at this little support level that it's been that is formed here. So it's really more of a little support zone. We know that it's not always, you know, the market isn't always exact numbers. So this little zone here we've seen over the last while has been support. And obviously I think, you know, banks tend to move in unison. Absa has been not quite enjoying the same, well, it's been in a very strong uptrend. It's made this topping pattern. However, other banks have not. So either Absa is being sort of the leader of the pack here, or we've got a bit of an anomaly taking place. So for now, we're quite happy to buy it while it's in this block, right? This is again a very high sort of risk-reward trade. If we take out the lows that we made here, let me draw in array, put our little magnet on. If we take out these lows here, that's our stop loss. So say 141.94, so we'll move that down to say 141 Rand to give it a bit of breathing room. If we stop out below, or if we trade below 140, we'll stop out of our long position and swing short and trade for that 82 Rand target, right? There's a long way down. I do think that in the current circumstances is somewhat unlikely. I think that we have a situation where our stocks are so incredibly beat down and people are so extremely negative that we have a bit of a value disconnect, and that there's a lot of upside in a lot of our shares. So I think there's a lot of opportunity to be invested in our market. So I think that from a probabilistic perspective, you know, yes, a head and shoulders pattern has something like a 78% chance of being a bearish formation, but it's only a 78. Okay, it's a high percentage, but it means that there is still a solid chance that this thing is potentially, you know, fails, right? So just because it works most of the time doesn't mean it works all of the time.
Yeah.
So our thinking is that we can sort of trade this trade up to, again, the 200-day moving average, which is around 170 Rand a share. And it gives us, again, a very good risk-reward ratio to be long. And if we are wrong, then, you know, we can very quickly tell by trading below 141 Rand a share. And we can swing short to potentially take that downward sort of momentum trade. But in the meantime, we have sort of a 1 to 5 risk-reward ratio, which is, again, the type of setup that we really enjoy.
Do you have a favorite between Absa and Standard Bank at this point? You know, considering the conversations we had, which are very similar, actually.
Yeah. So I don't really know. I don't. If I have a favorite between the picks today, I'd say it's Sasol. So if I would say, let's say we had 5 Rand to allocate, I would give 3 Rand to Sasol and 1 Rand to each of the other two.
Okay. That is very interesting. Now, we did speak about, you know, the one thing they have in common here is the mean reversion trade. So, like we're 5, Petri, let's talk about the mean reversion
Basically, I'm not going to get into too much of the statistical stuff.
Yes.
Averages and means and medians and modes and all these things, it can be very confusing. Essentially, what happens is that, for the sake of simplicity, let's use average, right? Over time, things tend to trend or to form averages. So for example, let's look at Standard Bank, right? And I'm going to use a 89-day moving average for these, and I'll remove the other ones. So we can see here that this is a average price that takes 89 days worth of data and calculates an average, right? So what essentially happens is that, statistical mean is slightly different, but it's very close to, I want to say, sort of an average.
Okay.
It is slightly different. But what essentially happens is that you've got price kind of moving around this one zone. So as more time goes by and more price data is available, you start getting a more statistical sort of distribution of prices over time, right? So what happens sometimes is that price moves away from that statistical mean, or that, call it average, of what the price has been, and then it moves back towards that. So you have this sort of like elastic effect where using a Bollinger Band is potentially a good indicator, and for the sake of that, I'll put a Bollinger Band on.
Yeah.
Bollinger Bands. Bollinger Bands. I'll take that off. So there's a Bollinger Band with a 20-day moving average, right? I'll take away our little trade indicator here. So what we can see here essentially is we've got a 20-day moving average in the middle in orange, and we've got these Bollinger Bands, which is then 2 standard deviations above or below that. So what we can see is when price is further than a certain point, so when price dips sort of below 2 standard deviations, like in this situation here, below the average, it tends to return to the average.
Okay.
And then it overshoots and it goes 2 standard deviations above the average, and then it returns to the average.
Okay.
So this is the type of sort of mean reversion that keeps happening. So it sort of has a central point where it is quite happy as an average, and then price will kind of push far to one side and then come back, and then far to the other side and then come back. So that's kind of essentially what we're doing here, is we're saying the trend here is generally up. The actual sort of mean here would probably be somewhere around the middle of this channel. So you could then trade from this bottom channel to the middle channel, and that would be the mean reversion move.
Brilliant. Get it. Thank you so much, Petri. Always a pleasure having you here with us. So that was founder at Herenya Capital, Petri Redelinghuys, with this week's trade of the week.